All right, let's jump right in. For as long as most of us can remember, the US dollar has been king of the hill in global finance. Untouchable, right? Well, something's going on. While Washington is projecting total confidence, the global markets, they're flashing some serious warning signs. It looks like a quiet but massive shift in the world order is underway. So today, we're going to unpack what's really going on with the dollar.
So what's the official story we're hearing from the top? Well, it's one of unwavering confidence. When asked about the dollar's recent slide, the message was simple. The dollar's doing great. It's a classic projection of absolute strength, sending the message that everything is completely under control.
Yeah, but here's the thing. The markets are telling a profoundly different story. What we're actually seeing is something that experts are calling a confidence shock. And look, this isn't just your typical day-to-day market jitter. This is the entire global financial system starting to fundamentally reevaluate and, reprice the value of American power itself.
So to make sense of all this, here's how we're going to break it down. We'll start with this central dollar paradox, then we'll unpack what this exorbitant privilege of America really is. After that, we'll look at the data, the writing on the wall, before getting into the reasons for this crisis of confidence. And finally, we'll see how the rest of the world is already reacting.
And this right here is the core paradox. On one hand, you have these official statements of confidence, but on the other, you have a market reality that points to what economists call a secular decline. Now, don't let the fancy word secular throw you off. It just means long-term. This isn't some temporary dip. It's a fundamental, slow-moving shift away from the dollar being the world's default currency.
So before we dive into the numbers that show this decline, we really have to understand what's at stake for the United States. And that brings us to this absolutely critical economic concept, a term that truly defines America's unique position in the world, its exorbitant privilege. What on earth does that mean? Well, to put it simply, it's a financial superpower, because the entire world needs US dollars for, everything. Trade, investment, savings. The United States can borrow money way more cheaply than anyone else. It can run these massive deficits year after year, which basically lets it live beyond its means. This privilege, this superpower, has been underwriting American prosperity and its global influence for generations.
And this is basically how that superpower works. It all kicks off with global demand. Since everyone needs dollars, the US can issue bonds, which are essentially just IOUs, and the rest of the world doesn't have much choice but to buy them up. But here's the wildest part. This lets the US spend way more than it earns, and it effectively exports the resulting inflation to other countries. This system has subsidized the American way of life for decades. It's a pretty sweet deal if you can get it.
But that very system, the one that's been the bedrock of American power for so long, is now showing some really deep cracks. So, enough with the theory. Let's look at the hard data, the writing on the wall that shows this privilege is actively eroding right now.
Just take a look at this chart from the IMF. It's incredibly telling. The dollar share of global reserves has now dropped to its lowest level in almost 3 decades. And this isn't a sudden crash. It's a slow, deliberate, institutional repositioning by the world's central banks as they gradually and quietly diversify away from the dollar.
And that slow burn has really started to accelerate lately. You can see it in these numbers. Over the last year, the dollar has fallen sharply against pretty much every major currency, down 15% against the euro, a whopping 25% against the Swedish krona. In fact, the dollar index just had its worst year since 2017. This is not a small correction. It's a major crisis of confidence playing out in real time.
So when confidence in government-backed money starts to get shaky, where does all that capital run? It runs to safety. And this number tells that story perfectly. For the first time in history, the price of gold settled above $5,500 an ounce. Now, this isn't just about commodities trading. This is investors flocking to the oldest, most trusted store of value on the entire planet. And this just brilliantly illustrates the scale of that flight to safety. A 25% jump in gold and an unbelievable 60% surge in silver, and that's just in the first month of the year. This isn't market noise, folks. When you see moves this dramatic in precious metals, it is a massive signal that big-time investors are pricing in huge risks up ahead and are losing faith in traditional assets.
Okay, so that's the what. A falling dollar, soaring gold prices. But what about the why? What is causing this massive confidence shock right now? Well, it really boils down to 3 key factors that are shaking the very foundations of the dollar's strength.
Historically, the dollar's strength was built on 2 things you could always count on: economic outperformance and political stability. Now, both of those pillars are looking pretty shaky.
You've got ongoing trade shocks that are creating chaos in global markets. You have an unpredictable foreign policy making longtime allies really nervous. And maybe most importantly, you're seeing political pressure being put on the Federal Reserve, the one institution whose independence is supposed to be sacred.
And this quote right here perfectly captures that unsettled climate. I mean, the idea of a key ally like Europe selling off U.S. debt is now being talked about openly, along with threats of retaliation. For global markets that are built on trust and predictability, this kind of language is, well, deeply unnerving.
So, faced with all this uncertainty, how is the rest of the world responding? Well, they are definitely not just sitting on their hands. Instead, what we're seeing is a proactive global effort to de-risk from the dollar and, in effect, reprice American power for the 21st century.
This slide just captures the fundamental shift in global strategy perfectly. The old playbook was so simple. Buy U.S. government bonds. They were the safest asset in the world. It was a long-term bet on America's stability. The new playbook? It's all about caution. Central banks are buying physical gold. They're setting up currency swaps to bypass the dollar entirely. And when they do buy U.S. debt, they're making a 3-month bet, not a 10-year one. That long-term confidence is shrinking.
And you can see this happening everywhere. The BRICS nations, Brazil, Russia, India, China, South Africa, they're actively working on ways to trade among themselves using their own currencies. Central banks are swapping their dollar reserves for physical gold. Europe is fast-tracking huge trade deals with other major economies that have been sitting on the back burner for decades. Each one of these actions is part of a larger global pivot away from depending on the U.S.
So the crucial point is this: the dollar is not going to collapse tomorrow. There's no other single currency that's ready to just step in and take its place. But world reserve currencies don't just fall off a cliff. They erode slowly over time. And what the markets and the actions of other nations are telling us is that this adjustment, this erosion, it's no longer some future theory. It is happening right now in real time.
And all of this leaves us with a really profound final question. As the dollar's dominance continues to erode and America's exorbitant privilege gets challenged, what does a world that is less reliant on American financial power actually look like? That, right there, is the multi-trillion-dollar question that is going to define the coming decades.